All right, welcome back to Sabi Market channel. So today we'll be diving into the debt to asset ratio of MTN Nigeria in 2023. So first of all, we would like to know what is a debt to equity ratio. So debt to equity ratio, which in some cases can be referred to as debt to total asset ratio. Debt to asset ratio rather. So this ratio actually indicates the proportion of a company's assets financed by debt. So we want to say, okay, this part of this company is actually financed by debt. So from this pie chart here, we could see that the total debt for this company is represented by this blue part of the pie, which is 21%, and then the other part is representing 79% of the asset funding, which is their total assets. So we are looking at how much of this is being funded by debt. So we could see here real quick that 21% of the assets for MTN Nigeria is being funded with debt, and the rest of it is being funded by this company themselves. So what does this actually say about the company is what we want to find out. What does it say about the financial health or financial competency and the efficiency of MTN Nigeria? So let's look real quick into the ratio. So the ratio, if we take a look at the data set, the main ratio here is 0.26. that is the debt to asset ratio is 0.26, which is what 26 percent, means that 26% of this company's assets is being funded by debt. So all right, now what does this ratio actually say? And that's our major concern for this video. What does this ratio say about MTN Nigeria debt to assets? So now, for a standard in the telecommunication industry, the normal debt to equity ratio ranges from 0.5 to 0.7. So but fortunately for this company, they have 0.26 as their debt to assets ratio. I'm happening to say debt to equity ratio because that happens to we happen to look at that more often, so I seem to have gotten used to that term. So just pardon me anytime I mention debt to equity ratio, I meant to say debt to asset ratio. So what does this actually say? It says that MTN Nigeria PLC has a relatively low debt to asset ratio, which is 0.26, that's 26%, and in comparison to its peers in the telecommunication industry, which have a debt to asset ratio of 0.5, 0.7, and all of that. So this 0.26 means that MTN Nigeria has a relatively low debt to equity ratio, and that indicates a healthy balance between debt and equity financing. So it further says that the company's total debt accounts for only 21% of its total assets, suggesting a conservative approach to debt financing. So now from this chart, we could see that 79% of the total assets are financed through equity, indicating a strong equity base. So most of the company's assets is not being funded by debt, unlike other companies whereby you could see that maybe 67%, 68%, 70% of the company is being funded. Its company's assets is being funded by debt. So this company, on the other hand, actually has a very strong equity base. So So like I mentioned before, that the debt to asset ratio for MTN Nigeria PLC is quite lower than the industry average for telecommunication companies, which typically ranges from 0.5 to 0.7. So this suggests that MTN Nigeria PLC is less leveraged than its peers in this telecommunication industry. So now what does this imply? What's the implication of this ratio that MTN Nigeria has? So this brings about financial flexibility. So with a low debt to asset ratio, MTN Nigeria PLC has more flexibility to take on new debts or invest in growth opportunities without over leveraging itself. So it puts them in a position of advantage. They can actually take advantage and invest in growth opportunities that present themselves for them because of that strong equity base that they have. Now it also gives them credit worthiness. So the company's conservative debt approach may improve its credit worthiness. So because they have a conservative debt, and this may actually improve their approach to credit worthiness and their ability to secure favorable loan terms, because most of the time they actually have a higher advantage when it comes to negotiations and all that. So it also helps risk management. So this low ratio that they have at this moment actually reduces the risk of financial distress and bankruptcy. So and then let's see how what limitations this can have. So now telecommunication companies often require significant investments in infrastructure, which may lead to higher debt levels. So if they want to, perhaps now they are interested in investing in a certain amount of growth, that may actually require them getting higher levels of loans and getting to deeper debts. So the expenses are actually very high for telecommunication companies because of the charges to maintain their resources and equipment in order to deliver premium service. So also you could take into consideration growth stage. So this low debt to equity ratio might be due to their established market position, and growth stage companies may actually have different financial needs. So this may actually just be unique to them, and overall MTN Nigeria PLC's debt to asset ratio of 0.26, like we mentioned earlier, indicates a very healthy financial position, and they actually have also indicate that they have a balanced approach to debt and equity. So this is a very good thing, regardless of whatever this company, because if we take a look at other metrics for this company, they might not be saying so well, but when we draw it back to what their asset look like in comparison to their assets, they're actually doing well in this regard. But then if we take a look at what their equity, if we take consideration about their equity, I think last year they made kind of a they didn't do so well in their debt to equity ratio last year, but then it's showing something differently for their assets ratio now. So for instance, if this company had something like 0.5 as their debt to asset ratio, it actually indicates a balanced mix of debt to equity financing. So if a company has 0.5 to 0.7, it's saying that these people are kind of balanced, have a balance between debt and equity financing. So it's suggesting that a company is using debt to finance growth, but is still maintaining a healthy equity base. Now if the ratio rises above 0.7, it actually indicates that the company has a high level of debt financing. So it may also suggest a company is over leveraged and vulnerable to financial distress. So, and it can indicate a higher risk of default or bankruptcy. So, and that may actually affect the creditworthiness of that particular company. So we actually have three levels. So we have the low ratio, we have the moderate ratio, we have the high ratio, with the high ratio ranging above 0.7, the moderate ratio from 0.5 to 0.7, and the low ratio from 0. The low ratio is actually 0.5 downwards, and then MTN Nigeria falls below this this low ratio, which is 0.26. So for here, you can say from this analysis that their debt to equity ratio is actually showing that they are doing very well in this sense. So, but then to understand the real financial state of this company, we have to look at other metrics, and that would be considered in future videos. We have to check things like the debt to equity ratio, we have to check the profit margin analysis, and other relevant metrics that indicates a company's financial health in a broader sense. So, but for this video, this will be all. Thank you so much for staying till the end. Do well to like, comment, and subscribe to the channel so that you get new videos once I update them. All right, and then until we see again, thank you.